Hi, Ron LeGrand here. Before we get started with the podcast, I thought you might want to know that I recently recorded a 90-minute online training about how we make so much money today in the terms business. That's on pretty houses in pretty neighborhoods, not the junk houses that we have to go rehab or wholesale. I go through step by step on exactly what I and thousands of my students are doing right now to make the fastest and the easiest money in real estate without using your money or credit. If you're interested in doing just that, go to thementorpodcast.com/free training. See you there.
Welcome to the Mentor Podcast, where the most highly motivated entrepreneurs come to get their weekly dose of financial stability with host Ron LeGrand, as well as other nationally recognized thought leaders who will teach you how to get, grow, and protect your wealth.
Well, hello everybody. Ron LeGrand here with another issue of the Mentor Podcast, and I have my longtime friend on here today, Mr. Lou Brown, who hails from Atlanta, Georgia, who has now got a beard, which I'm still trying to decide whether I like it or not. But the more I look at it, the better I like it. I told him the other day it looks sexy.
Sexy, baby. I love that one.
It definitely makes you look more intelligent, that's for sure.
Oh, I love that too.
All right. Well, now look, you're the expert on trust. So we're going to talk about trust today because there's never ending questions on this, as you well know. You get more of them than I do. You're talking about it more than I do. So there's three kinds of trust that we're going to discuss today. And of course, that's going to be a land trust and a personal property trust and a paper trust. And we might even get to talk a little bit about that elite trust that you and I, if we feel like we're not going to scare the hell out of everybody. There are just a few people watching that probably even need to know that it exists, but I don't want to talk about it too much because for most of our listeners, it's probably not applicable to them. So I don't remember what year you and I met, Lou. It was 1984, I believe.
I believe you're right. 1984, something like that. We met one another in Jacksonville, Florida, I think.
I was president of the RIA group, I think, because that's when I got elected. I was the only one running, so I got elected. And then you, I don't know how we met. I know you were president of Georgia RIA at that time, weren't you?
That's right. Georgia Real Estate Investors Association. So
that's how we met as group leaders. And then, of course, we've been working together ever since. In fact, you and I are probably two of the oldest people in the industry that are still alive.
That's right.
And you're been at real estate a little longer than I have. When did you start real estate? 78, 79, somewhere in there?
Started in 1976, bought my first property in 1976 and haven't looked back since then. I'm very pleased to say I bought my first house when I was 18 years old. And so it put me in a position to learn about real estate, but also to enjoy the fruits of the labor. And started to then get into duplexes, multifamily, and then evolved into pretty much a focus on single family these days. Single family,
you know what?
Commercial.
I haven't told anybody this, but I actually bought my first property in 1974.
How about that?
I was living in Springfield, Ohio, and a friend of mine sold me 3 junk properties, 3 crappy roach-ridden junk property. I had no idea what I was doing, but hey, I was in real estate. I went down to the bank, got a loan on them things, and oh man, they were junk. But I don't talk about those much. Anyway, let's get going here. We got to first talk about this land trust thing, or as I refer to as a grantor revocable trust, because so many people still have no idea what land trust means. And by the way, as far as I'm concerned, that's an advantage. That's not a disadvantage.
True. You know, one of the things I discovered is there's about 30 different trusts out there. And when you get into the weeds of trusts, you know, you talk to an attorney, you talk to a CPA, certainly they've heard of trust. Certainly they've dealt with various types of trust, but our particular type of trust we're going to talk about today is a very unique thing called a land trust. land trust does things that other trusts don't do. And that's important for people to understand, because a land trust actually converts real estate into personal property interests. And that's a very unique thing that the land trust does that no other trust does.
Well, meaning that the trust now owns the property. Instead of the property being on public record, the trust is on public record, and nobody knows who owns the trust, which is one of the big advantages of it, of course, privacy. So
Privacy, right? Your name is not on public record as an owner, even if you used to own it and now you've deeded it to the trust. The fact is now the trust owns the property, and nobody, because it's not published anywhere, nobody knows who the beneficiary is. There's a couple of states that we have to navigate. That's Pennsylvania and Arizona. But other than those two states, there is total privacy and anonymity of ownership.
you say you have to navigate it because they want a copy of the trust agreement recorded?
They want to know who the beneficiary is.
Right. They want a copy of the trust agreement recorded. So what do you do in that case?
We tell them exactly who the beneficiary is. Guess who's the beneficiary? Another trust. It's a personal property trust. So we really focus on two different kind of trusts. The land trust for real estate that has a legal description, it goes into a land trust. And if it's personal property, even the interests of a land trust are personal property, so they can go into a personal property trust. So two different distinctions. Those two different kind of trusts are great.
Well, you should probably already know we've already screwed everybody up. but you're right. Point is just to keep the people that are beneficiaries off public record by putting a trust owning a trust. And hey, they make the laws. All we do is figure out a way to work within them. We don't break them. No matter how law they make, there's always a way to work within it and defeat them, what they're trying to accomplish, because they're trying to just totally ruin the reason for having a trust, the privacy. Without the privacy, gosh, one of the big benefits.
Yeah, and I would say that one of the biggest benefits, in fact, the biggest benefits, is probate avoidance, which you cannot get with any other entity. So they can't defeat trusts for that reason. Every single person needs a trust if they have any assets whatsoever. Everyone needs a trust. They need a land trust for their real estate. They need a personal property trust for everything else they own: stocks, bonds, mutual funds, bank accounts, CDs, CDs, motorhomes, gun collections, coin collections. All of those things go into personal property trusts. And now we're going
to get back to that, but let's get through the other benefits of the land trust first. There's a whole bunch of them, but there's four big ones. You mentioned privacy. You mentioned probate. People die, trusts don't die. So the beneficial interest of a trust, one of them dies, the other one just carries on life as usual. And no probate, nobody even knows it really, because nothing has changed downtown. Another one is ease of transfer. When the one you're transferring to has any idea about this trust and understands it enough, you just assign a beneficial interest. So you're selling the trust, you're not selling the property, but the property is owned by the trust. So you're selling personal property. All right.
That's correct.
And then the last one is lien avoidance, lien attachment avoidance. Why don't you go ahead and explain what that means?
Well, the thing is, there's about 30 different benefits of trust that you cannot get with any other entity, not a corporation, not an LLC, not a limited partnership. You can only get those benefits using trust. I go into great detail in my explanations of those things. But the point is that you are also able to, if anyone got a judgment against you personally and you don't own anything, that's the best thing ever, right? So the fact is that the property's owned by the trust, and if anybody sues you and gets a lien against you, they cannot attach that property. Now, there's ways that they could go deeper into that, but of course, there's ways that we have gone deeper into that to avoid that issue.
Well, now you're coming down to the ownership of the trust, which I'm getting to. Okay, so even the IRS, lien against you won't attach to a property you don't own. But we need to make everybody understand that does not mean that a predator cannot take that trust away from you. It's not a foolproof predator avoidance device. It's just the first layer of one for those benefits that we just discussed. Is there any downside to putting the property in a land trust?
No, period.
Okay,
Period.
well,
And I'm talking
might
about
be one.
personal residence. I'm talking about every aspect of your life. It's a very good idea to do that. And we'll go back to that probate for just a second. Probate avoidance, the fact that the property's in trust, the fact that you pass away, well, now it's going to go to the beneficiaries, your successor beneficiary, without having to go through the pain, suffering, delay, and expense of probate.
Yes. There's one disadvantage, and that is the public ignorance. And that, I wished I could tell you that every attorney understands these trusts. I would be lying, but I will give you the simple advice. Refer to them as a grantor revocable trust, and you'll get more attorneys to understand it than you will using the words land trust. Some states they're really common, some states they're not. By the way, I don't know when they began. I always tell everybody, if you want to find out, go ask Julius Caesar, because they were around when he was around. We didn't invent these things. We just started using them,
Well, the actual land trust itself was actually invented by a title company. It was invented by Chicago Title Company to solve a title issue. And so that's why they call it the Illinois Land Trust, is because it actually got its birthplace back then.
All right, let's talk a little bit about personal property trusts. What you said, everything you own goes into personal property trust if it's not land. One, by the way, whether it be a house or whether it be your motorhome, it's always one item in one trust, never two items in one trust, one egg in one basket, one thing at risk. No matter how you title a vehicle, if it's got a motor in it, it's deadly. And you don't want that unsafe asset to be mixed up with any other asset. So we always put all of my vehicles, and I got a ton of them. Some of them are old classic cars now. They just keep coming. Somehow I got into that. I don't know where that switch got turned on, but it was
boredom. That's where that got turned on. You already got real estate licked, so you had to have something else to entertain you,
I guess. Anyway, each car is in its own personal property trust, but I got to warn everybody, you're probably going to have a struggle with the DMV when you go down and try to take title to a property in a personal property trust. I will tell you, you're going to have to take the trust with you because they're going to want a copy of it, at least here in Florida.
Well, I've got a suggestion there.
Yeah, please.
I do. Don't go there. The answer is to mail it in. When you mail it in, you're dealing with an entirely different group of people than the no's. I call them the land of no's. When you go in and you start talking to people and the first thing out of their mouth is no, and you got to bring me this. And then you bring them that, and then they say, now you got to bring me this. And then you bring them that, and they say, now you got to bring them this. No, the thing to do is to mail it in to the DMV. They have seen these before. They don't have the issues that you do have at the local level.
Yeah, but that scares me. First of all, I never know they got it. Second of all, I never know anybody opened it or who opened it. And third, I may need it quicker than that.
Well, I'll just say that I've never had a problem with it, but the problems that I have had have come from doing that face-to-face thing.
Yeah, but I need my tag to be put it on the back of the car. I can't sit around and wait for them to mail it back to me.
Okay.
Especially now in COVID times. So we just fight it out, Lou. I mean, we just go in and I put so many cars in the personal property trust. Frankly, I let Tish do it. She's got to be an expert at it. But I'm just telling everybody, you better take the trust along with you. Don't produce it unless they ask for it, but they're going to ask for it most likely. I know they will in Florida. They have to have it on record, and they won't do it without it here. How about Georgia?
Yeah, no, they don't have to have a copy of the trust. And what we say is this is similar to a corporation. And just like a corporation, for example, a car dealership, something like that, they do have to have the tag in the name of the company. We just say this is similar to that, and they go, "Oh, okay, yeah, we've done that before. That's not a problem."
Yeah, if you get lucky, you get the person in there that's done it before as well. I bought a car at Mecum Auto Auction in January. You would not believe the problem I had just getting them to title it into a trust. I went to 3 people. I went to the whole seminar with them. Finally, one of them come along and said, "All right, I think we can do that." As many cars as they sold, for God's sakes, I can't be the only one that ever put a car in a personal property trust. All right. I'm sorry I brought it up now. So there's another thing called a paper trust for incoming debt owed to you, mortgages, deeds of trust, land contracts, tax liens you might buy, and so forth. Tell me, what's the difference between a paper trust and a personal property trust?
I've incorporated it into my personal property trust, so I don't use a separate trust for that purpose.
So, but they're both personal property trusts. Frankly, one just describes the paper, and one just describes the personal property.
That's correct. That's correct. So we've got actually a separate addendum on our trust that's where you put whatever is in that trust. So that's the exhibit to the trust that says, okay, this is what's in this trust.
All right. Well, I've got a question for you that I get a lot. Can I avoid transfer tax by using land trusts?
Well, the answer is sooner or later, there will be a transfer tax. Now, the question becomes when is sooner and when is later? At the time that a person places their property into their trust for estate planning purposes, there is no tax. And the reason—
You're talking about the seller.
The seller or you placing your property into trust. That is a gift from you to your trust. So when that goes into and is accepted into that trust, well, that does not trigger a transfer tax. Now, at a later date, when that trust may sell to someone else, then at that time there can be a transfer tax.
All right. Well, first of all, in Florida, there's a $7 transfer tax because it's $7 per thousand here. But from my experience, you put it in for your own purposes. There's no or little or no transfer tax. But the real thing that they're asking me, they take title from a seller. Can the seller put the property into a land trust and then transfer that trust to you at closing and avoid transfer tax?
Well, what everyone needs to understand is, what is it that you are purchasing that day? Are you purchasing real estate, or are you purchasing the personal property beneficial interest of a trust? And the answer is, it depends on what state you're in as to whether there's a taxation on that personal property transfer. And the answer is that's not published anywhere. So that transfer, that private transfer of that beneficial interest of that land trust to another individual or even another trust is something that could or could not trigger a personal property tax. Generally speaking—
You're not a politician, are you?
Well, I'm trying to answer it as clearly as I can. Generally speaking, there is no tax.
All right, so let me try to simplify it then. Seller deeds property to a land trust. Land trust is created with seller's name on it as beneficial interest, which means it's got to be explained to begin with. All right. The truth is, I don't know of any attorney that's going to close that transaction without collecting transfer tax to begin with. I doubt you're going to be able to talk them into it, because they truly are selling the property, because they may have put it in a trust, but they're selling the trust either way you look at it. Now the question is, I want to buy the property. Well, the transfer tax has already been paid in that case. So if we can do this and not pay the transfer tax, here's the real question. I'm buying the trust, means I'm buying personal property. I'm not buying real estate. But of course, that personal property owns real estate. So I'm just transferring personal property. So there would be no transfer tax as applied to real estate. However, now is there sales tax, which is going to be more than the transfer tax on the property.
That's why I say it's really subject to state law in terms of what they
All right.
collect taxes on.
Okay, so we brought up the question. Now you got to go to your attorney and try to explain to him to this or her so that they understand what the hell you're talking about, because they're going to give you a crappy answer if they don't. So I guess the answer is, the question would be, is there sales tax if I buy a land trust, which is personal property? And that's something that has to be investigated. And by the way, if you guys will do that, I want to know the answers in the state you're in. I would know myself.
And I'll give you a shortcut to this whole thing. If you're a member of the local Real Estate Investor Association, which I was the founding president of National RIA way back in 1993. And so I've stood before many, many RIAs across the country. It's a great connection that you can make on a local basis with other investors. And one of the things you want to find out is, who are those folks using? The guys that are really doing the business in the group. You want to find out who their attorney is, because that person is probably a player. They're probably someone who understands exactly what you're talking about and has no issue with it. Now, if you have an issue with it, I would say go find another one. Go find someone that doesn't have an issue with it, and that's who you want to use. But you don't want to just use them for that closing. You want to use them for every closing going forward, and to actually put it into your closing agreements, your purchase and sale agreements, that you're not only going to buy using this attorney, you're going to sell using this attorney. And that way you can kind of close the loop on any issues that might exist around.
But I'll tell you what, Lou, I doubt seriously they're going to find anybody in any RIA that knows the answer to that question. I've never met anybody that knows the answer to that question, but not like I've asked a lot. I'd like to have the answer to that question myself, actually. So somebody's actually got to get a hold of an attorney and find out. And I'm just kind of hoping it ain't going to be me. That's all. Let somebody else go do it. Hey, you and I have got enough arrows in the back. We pioneered enough, don't you think? Let somebody else go take a few steps. Come back and tell us.
Well, facts are facts, and those are the facts.
All right. Now listen, the next big question comes down to ownership of these trusts. Because just because I own something in a trust don't mean they can't take it away from me if they get a judgment against me and they find out that I own the trust. Now, I'm in a tenants by the entirety state. That helps a whole lot. As long as the judgment's not against both my wife and I. If it is, I'm screwed no matter what, pretty much. But I've come to the conclusion nowadays that if I'm not in a TBE state or I'm not married, the next best thing is a limited partnership to own the entities. Now, in my case, I have LLCs that own my land trusts, and then I have a limited partnership or tenants by the entirety that own my LLCs. Your comments on that, please.
Well, I think each person has their own set of circumstances. And it really matters as to what end of the spectrum you're on and getting involved in this business. So, for example, if you're just getting started and you don't have all these entities, LLCs, limited partnerships, et cetera, you can do quite well with just the land trust and the personal property trust. I would say the land trust as the owner of the property and the personal property trust as the beneficiary of the land trust. Meaning that if anybody ever got through this land trust, what would they find? They would find another trust. And that would be very expensive for them to find this second trust, by the way. And they have some business decisions that they have to make along the way about, am I going to spend any more money picking up ducks to figure out if I've won a prize or not?
You're right. I'm not really talking from bare beginning. You're right. Nobody needs to have all this stuff to go buy their first house. In fact, I bought my first house in my name, believe it or not, but it didn't take me long. I had to hear about land trust 7 times. 7. Okay. But after that, I've been using them ever since. So you can land trust and be the beneficial interest yourself, which is way better than having your name on public record. But for those who really aren't going to get into this, who do you have on the land trust? LLCs or personal property trust?
Personal property trust definitely is my next layer of defense. So the land.
Then who owns the personal property trust?
The personal property trust. Now it becomes a matter of where you're at in your spectrum. If you want additional layer of protection, you can add an LLC. That's an optional role. The LLC being the beneficiary of the land trust. If you're in the bigger echelon, meaning that you've got some assets truly that you want to pass down from generation to generation, then you've got another opportunity of an entirely different trust. But the answer in my world is a living trust is the beneficiary of the personal property trust. That's generally for somebody just getting started and doesn't have a huge estate. Land trust owns the property. Personal property trust is the beneficiary of the land trust, and then beneficiary of the personal property trust is a living trust. The living trust actually,
where you've got to have some kind of a bank account. Where's the money going to flow through in that structure?
so the money is actually in a separate account. I have people set up a separate account as a personal property trust, and that account is what's at the bank. Now, how my people do it is they become the manager of the property. So the trustee of the trust hires my guy, the person who is actually owning managing the real estate, meaning you, the investor, actually becomes the manager, not the owner, the manager of the property. And you have the right to collect the rent. You take those rents, you deposit them into personal property trust bank account, and the bank account writes all the bills, the property taxes, the insurance.
So what entity is the personal property trust bank account for?
That is for the sole purpose of having a bank account.
Okay. So what you're saying is the bank account does not have to be for the entity that actually owns the thing.
That is correct.
Okay.
Entirely different.
I'm structured a little different, and I teach a little different, which actually is a little simpler, I think. Okay. One house, one land trust, but many land trusts you want can go in an LLC. And of course, that's going to depend on whether it's Keeper LLC or Flipper LLC. Those two should not be mixed. Let's say it's Keeper LLC. I'm okay with putting multiple land trusts in that LLC. But then again, I want that LLC either own tenants by the entirety where applicable or with a family limited partnership. Now, all of this stuff is going to wind up going into a living trust, but not directly in line there. Living trust will own all of my assets, which will include all the ownership and all of the entities. But the LLC then can have its own bank account where all the money comes in and goes out of. And no predator is going to get all the way down to the limited partnership or tenants by the entirety that owns the LLC that owns the land trust, if that makes any sense. I know we've totally lost all of our listeners. Yeah. There's no way
it's a more complex structure. Yeah. Again, it depends on where people are at in the spectrum of
what
they want to protect and what they're trying to do. You know, if somebody's just getting started, to me, they don't need all that.
No, of course not. But on the other hand, they still need to understand that they have to protect their assets, whatever they are. And frankly, just adding real estate to it is just another cog in the wheel. But they still ought to get structured correctly. And most people coming in need to understand how to do that and get started on it, regardless of whether they got a lot of real estate or not. Just add that as they go, in my opinion. All right, listen, I got a few minutes left. I thought I would like to have you at least touch on this elite trust thing. Just kinds of people.
So you probably have not heard of this type of structure, meaning a lot of people at home. And the idea is that, you know, the land trust is a thing and the elite trust is an entirely different thing. So let's think about the land trust. It's a simple trust. The elite trust is a complex trust, meaning that it files its own tax return. The land trust is a flow through, meaning that whatever income occurs or benefits of that trust in terms of depreciation, what have you, flows through to the beneficiary. In the elite trust, it files its own tax return. So that's one distinction. Another distinction, Land trust is a grantor trust. Elite trust is a non-grantor trust, meaning that somebody else set it up and put the rules in place, so to speak, of that trust, and then you take it over. Once you take that trust over, it's a non-grantor trust, which can have tremendous asset protection aspects to it. The fact that you did not set it up also means you cannot take anything out of it by court order or anything else, because you didn't set that trust up. It was actually created.
Also, tremendous tax benefits as well. First, I want you to give me the name of this thing.
Okay. So
I cannot remember the name of this thing.
All right. So there's 5 elements of the elite trust. It's a dissing, that's how I remember it, discretionary, meaning that the trustee has the discretion to write any check as it relates to that trust and has the total authority to do so. It's irrevocable, where a land trust is revocable. It is spendthrift. It has a spendthrift provision, which the land trust does not have. Now, spendthrift means that if anybody gets a judgment against you personally, it cannot be affected into the trust, meaning somebody gets a judgment against you for $1 million against your personal name. They can never touch the assets of the spendthrift trust because of the spendthrift provisions of the trust. The trust was set up by somebody else. The trust has its own assets. Nobody can ever go inside that trust to redeem a judgment against you personally. So that's another aspect of it. It's a complex trust, and it's a non-grantor trust. So as I was saying before, land trust is grantor. This is a non-grantor trust. So there's 5 distinct elements that are completely the opposite, so to speak, of a land trust versus this. Now, what is this? So this is a major league asset protection tool. And one of the things that it also provides is tax benefits. As you were saying, Ron, you don't get tax benefits really with a land trust. It's just a flow through. Whatever you are entitled to as an individual, you're entitled to as a beneficiary of a land trust. But over here at the elite trust, and if you're a professional, maybe you are a doctor, lawyer, Indian chief, whatever you are, you may have some income that is significant income. And because of the elements of the elite trust, you can actually put yourself in a position to save a fortune in taxes because of how it's done.
Yeah, up to 90%. But, we got to disclose, it's certainly not for everybody. And you need to be in a very high income bracket before you would even consider it. But I want
assets and income. Yeah. And
if you want to know more about this trust that we was talking about, you can contact him or I, and we'll direct you to the right person that will give you all the information and get it set up for you and so forth. And if you're in a high income bracket, I think you probably should at least explore it. And I'm going to tell you right now, if you do, you're going to have a hard time understanding. It's going to take multiple attempts. And there are no advisors anywhere around you that can advise you on it. Your attorney will poo-poo the hell out of it because they don't understand it.
That's all. Knowledge is power, and many times they don't know what they don't know. But it's been a really great thing to learn about. I do have a link if people want to read more about it, and they can find out if they're interested in it. MaximumAssetsShield.com/elite. And you can just read up on it and see if it's of interest to you. If it's of interest to you, either let Ron know, let me know, and we'll definitely get you a consultation, a private consultation to see if it is right for you. Generally speaking, if someone is paying $16,000 or more in taxes per year, then we can definitely justify that it makes sense for them. So that kind of helps people to get their head around whether they would have any interest in it or not. They can just look at themselves and say, am I paying more than $16,000 in taxes a year? Okay, then maybe I need to look into this.
All right. And how do they reach you, Lou?
In so many ways. StreetSmartInvestor.com. I'm also on YouTube. We call it LouTube, but Lou Brown. And you've got my 800 number, 800-578-8580. Happy to answer questions. I get trust questions nonstop all day long, and I love to help people learn, really what's right for you.
Yeah.
I started out using land trusts. I'm very thankful of the fact that I started using land trusts way back in 1983, and I've used them ever since. And it's been a phenomenal, beneficial thing for myself and my family. So absolutely, positively, you need to learn about that. Also, you can check out MaximumAssetShield.com. That gives you more information about the trusts information that we've got for you as well.
Okay. And if you're new to this podcast and you don't follow me yet, you can find me at ronlegrand.com, and you can find a webinar where I teach you how to buy and sell properties on terms at ronlegrand.com/terms. And I think it's about a 70 or so minute webinar where I literally go through the steps of buying, selling houses on terms. Someday I'm going to teach Lou Brown how to do that. Hey, the more I look at it, I'm telling you, the better I like it, man.
Yeah, baby.
How do you think I'd look? Mine would be white too, of course. I'm trying to picture.
Why don't you give it a shot?
I don't know. It's itchy. Yeah,
no, it's not. It's not itchy. If people say that, I said, "Oh, I don't." Maybe yours is itchy, but mine's not itchy.
I might just do that. You never know. I'm losing it up here, so I'll take it and put it down here, huh?
I call this my COVID beard. Just let it grow. And I said, "Hey, this is not bad."
All right. Well, we've chatted long enough here today. I always appreciate you, man.
All right. Love you too. Take care.
Blessing. Yes, sir.
Look forward to seeing all you guys soon.
See you soon at some meeting whatsoever. We're a member of mastermind groups, and we could run across each other a few times a year.
I'll be doing your summit here pretty soon.
That's right. You will. All right. I'll see you. Bye.
Take care.
That's all for this edition of the Mentor Podcast. To connect with Ron and learn how you can attain financial freedom, as well as up-to-date strategies to grow and protect your wealth based on today's discussion, go to www.connectwiththementor.com.